Hello and welcome to this week's edition of India Inc. 2.0. I'm Nayantara Rai. This week, we're coming to you from Kolkata. I'm at the country's largest Spencer's store. It's part of the RP-Sanjiiv Goenka Group, and I've come to interview the 27-year-old Shashwat Goenka. He's the only son of industrialist Sanjiiv Goenka. Let's find out if Shashwat's going to be able to take the 40,000 crore rupee conglomerate to new heights. Thank you, Shashwat, for inviting us here and agreeing to be part of India Inc. 2.0.
Thank you so much for having me as a part of India Inc. 2.0.
Well, we wouldn't have it any other way. You have such a rich lineage, if you would let me observe that, your ancestors starting to do business with the East India Company.
Right.
So you have a business blood, if I may call it that.
Absolutely.
Did you always know that you wanted to join the family business?
Yeah, I think somewhere at the back of my mind, I always had it that this is what I want to do in the long term as well.
So you never thought that maybe I'll venture out on my own, or that journey still has to begin?
So I guess that's part of everyone who's been with the family business as well. Everyone does do their own things in addition, and that's what keeps our group growing. And so I think in that sense, I don't think there's a limitation in terms of being with the group or the family business and then not being able to do what you want to do, because you can do that under the same umbrella.
So then, would it be correct for me to assume that your journey is beginning at the group with retail, but it doesn't stop at retail?
Absolutely, absolutely.
So since you've joined the business, we have seen the impact it's had on the balance sheet, a green effect, if you let me call it that. How has it been?
I think it's been a great journey so far. In fact, my first mandate was to make Spencer's profitable and at the corporate EBITDA level, and I think that's what we've been working towards over the last 5-6 years. And it's good that we finally got into a cash break even in the first quarter this year.
That's a landmark event.
Absolutely.
So by when do you think you'll be green and EBITDA positive?
So essentially we are cash break even at this point in time, and we should be looking to be consecutively and sustainably profitable quarter on quarter going forward.
So do you have any targets that either you have set out for yourself, or maybe your father has, or the shareholders, or whatever?
I mean, yes, of course, we have our internal targets that we strive to meet in terms of sales, in terms of margins, in terms of bottom lines.
So would you like to share that?
No.
Okay, fair enough. So how did you manage to get EBITDA positive, etc.?
So there were a lot of things that we worked on. We worked on growing our top line significantly. So we've been a food first retailer always.
Yeah.
And so food is really our strength. As when you walk around the store, you'll kind of see that the food assortment really does cater to pretty much every kind of customer that you may possibly have across the country. And so the idea was to keep that growing significantly. So in fact, if you look at a recent Nielsen report, while modern trade food grew at 8%, Spencer's food grew at 16%.
So you outgrew the market?
Absolutely, and by double.
Yeah.
So I think the idea was for us to keep our strengths going and then work on areas where we need to focus more on. So when we started working on apparel, which gives you much higher margin, we started working on general merchandise, which is all your home products and kitchenware, which also gives you higher margin. So these higher margin categories, while they are lower on sales, give you a much better bottom line contribution.
I'm going to go into all of that one by one. But first up, we're also getting a chance to interview you before the demerger comes into effect on the 1st of October. Spencer's is going to be listed soon thereafter. What kind of a valuation are you targeting?
I mean, I guess it's hard to predict what kind of a valuation, but I think what we've tried to do over the years is really make sure all our operational metrics are correct and all our financials are actually absolutely the way they should be. And I think we'll have to just leave it to the market to see where we actually get listed at.
And I don't know whether it's a coincidence or you can just say, great timing, etc. Just look at the stock prices of the various retail companies. You can look at Future Retail,
Absolutely.
Avenue Supermart. You've
They're
cashed out with the timing, haven't you?
I think we've just gotten lucky, but then again, I mean, we'll have to really see how the market rates us vis-a-vis our competitors.
So by when do you think we could see the Spencer's listing? Has that been decided, or it'll be soon thereafter?
It'll be soon thereafter.
But in this financial year, you think?
This year, absolutely.
And how have you handled the demerger? Like, what was the reason behind it? Is it also part of a succession plan?
So no, it's more part of a larger overall scheme that we have, which is we want to give the shareholders their fair return, and shareholders who were invested in our electricity company but may not have been getting their fair return because of all the different unrelated businesses that we were in. And so the idea was, let's carve out all the unrelated businesses into independent entities and let the shareholder have their value for each one of those businesses for which they've been with us and stuck on with us over the last many years. So
and now you're getting a thumbs up from the stock market, so that initial blip, now you're back at the pre-demerger announcement valuations.
absolutely.
So do you like power generation? Have you thought about entering that business?
I mean, yes, I think it's very intriguing and interesting, and I think the one thing that we learned from being with in a family business kind of a background is really that it's not really the specific business that kind of makes or breaks you. It's really doing business no matter what the industry is, and that's what we're here for. So in that respect, I mean, I think pretty much no matter whether it's power or music or retail or anything else, I think they're all absolutely the same.
So was it your decision that you wanted to enter retail, or was that something that was decided by the family?
So I think that was an interesting decision that we reached. I think I was always very clear that I want to start with retail because, well, from the consumer side, it seemed something that I understood much more innately and was much more interesting. Also, there was no proven model at that point in the country. And so I would have had that.
How interesting can power generation be to a 20-year-old, right?
Agreed. Absolutely. And I think Dad as well felt that I should do retail because the challenges were much more. And I would learn a lot more and a lot faster in the retail space. So I think it was both independent decision, but the same decision. So it worked out well.
Same result, yeah,
Absolutely.
it worked out well.
Absolutely.
So going forward, what is your plan as far as Spencer's? And I'll get to the apparel ratio,
Sure,
apparel to FMCG ratio, etc.
Absolutely.
First, if you could just talk about your brick and mortar expansion plans.
So brick and mortar expansion. So our mainstay has been brick and mortar so far. We in fact entered e-commerce very recently. And so brick and mortar, we're today at 125 stores. We've opened 2 new stores this financial year. We're looking to add 10 more by the end of March. And this is going to be essentially in the north, east and south of the country. And we're looking at growing.
That's all the 4 directions.
North, east and south, not the west.
Yeah.
And we're looking at basically expanding through hypermarkets, so which is a slightly larger trading area per store, so ranging between 20 and 30,000 square feet. And it kind of has all the categories, food as well as all the non-food categories. So it gives us a larger share of the customer's wallet, and that's really how the expansion is going to be year on year. We'll be looking to add between 15 to 20 stores every year starting next year.
So what's your capex every year?
So the capex varies each year depending on the size of the stores, and where the store is located also determines what the capex for the store will be. But each store would range anywhere between 4 and 7 crores.
So
of initial
let me
capex.
ask you a cheeky question.
Sure.
Hypercity is believed to be in the market. Apparently, Kishore Biani and the Future Group in talks to buy it out.
I read that article.
Are you going to be entering those talks? Are you in the frame maybe for that acquisition? Would you be interested at all?
I don't think I can comment on any of this at this point in time.
But would you look at inorganic growth?
Absolutely. I think for us as a group, we focused on organic and inorganic growth across all our different businesses. And I think it's the same with retail and any of our other businesses. We always are open to looking at inorganic expansion as well.
Yeah, you've done, for example, these edible companies. For example,
yeah.
There was one in Gujarat recently.
Exactly. So we started our own venture, which was a greenfield venture, which is called 2Yum.
Yeah.
And then we also acquired a company based in Gujarat, which makes similar snacks. It's a 200 crore company with 45 different products.
So are you looking at other acquisitions in this kind of a segment?
Absolutely.
Mainly food processing, value add?
Absolutely. Food processing, value add and packaged foods and packaged snacks, I think is going to be a growth area for us going forward. And we're definitely looking at a combination of organic as well as inorganic.
So we are in your food aisles.
Absolutely.
What are the plans as far as food goes, particularly your private labels, for example, that you just touched upon?
Right. So we've had a very strong private label program in our initial years. Over the last 3-4 years, it became almost like any other brand in the store, and we didn't want to.
And they have higher margins.
They have high margins, absolutely. And we consciously chose not to promote private labels over and above what the brands were giving us initially. I think we're going back to the original strategy of actually promoting private label alongside the brands that they have, because we're able to actually produce similar quality products at much cheaper prices to the consumers. And so we want to give them that opportunity of giving the same or better quality at cheaper prices to our consumers. And so therefore
your private labels may not be the luxury food items like the best of cheeses or the best of olive oils, but it's more mass market.
So we have, essentially today our portfolio is more mass market, but as we go forward, we would want to enter into a smaller segment of the premium market as well.
Because what's also lovely, and we are incidentally in the largest Spencer's store in the country, what's very interesting is that you have something for everybody. So, you know, you have a niche market, you have the mass market.
Absolutely.
So, are you going to continue going forward with this? Is it?
Absolutely, absolutely. Our target has been really to study the catchment that we're going to be present in, and depending on the different segments of society present there, we need to cater to each and every one of those segments through our stores, and that's really been our strategy, and it's worked well for us. So I think we're going to keep to that.
Before I go into commercial break, we saw some path-breaking reforms by the government as far as FDI and food retail go. Has that enthused you at all?
Absolutely. I think it's brilliant, and the more FDI we have in this, the more competition there's going to be, which means the more we'll have to be on our toes, the more we'll have to reinvent, which means the more as customers we will be able to get better opportunities and better options in terms of things to shop for.
But you will not look at maybe getting any FDI on board?
We're not close to the idea. We aren't actively exploring, but we're not close to the idea.
With that, we'll take a short commercial break. Stay tuned. You're watching India Inc. 2.0. I'm in conversation today with Shashwat Goenka. Welcome back. You're watching India Inc. 2.0. I'm Nayantara Rai. Today, I'm coming to you from Kolkata. I'm at India's largest Spencer's. It's spread across 50,000 square feet, and I'm in conversation today with the 27-year-old Shashwat Goenka. Shashwat, now we are in your clothes aisle. Let's talk about your garments business. I believe these are all private labels?
Absolutely. We've gone to a model where we were 30% private label to 100% private label model. And the idea is we can actually then present the relevant assortment to our customer. And we can be in complete control about the design, about sourcing it, about manufacturing it, about making sure it's in shelves on the time. And we've actually introduced a new concept called FMFG, similar to FMCG, but it's fast-moving fashion goods.
Okay.
So where 30% of our goods of
How
clothing.
How fast-moving is it?
So every 3 weeks, 30% of it changes. So every
That's
time,
quite a large churn.
Absolutely. So every time the consumer comes in, they're always seeing 30% of new stock on the floor, because there is that. Fashion today is moving at a very fast pace, and what was happening is when we had other brands and not our own brands and not private label in the store, we were not able to maintain providing the consumers with that much new. And in a grocery store, which is what Spencer's really is you come into shop 2-3 times a month at least, especially in the hypermarket. And so if you keep seeing the same clothes again and again, fatigue kind of sets in, and people almost think that, oh, this is so old, the stock, we don't want to purchase it. So the idea was do something similar to what Zara does, where they every 2 weeks have new merchandise. So we went to an every 3 week, because to manage our supply chain, we had to keep it 3 weeks.
But don't you think you're closing in on an important window by not keeping other brands that people recognize?
So yes and no. I mean, earlier we always had the dilemma of should we not, and then we moved into this whole idea of creating a fashion brand, an Indian fashion brand for ourselves with an international aesthetic.
Okay.
But Indian roots. So, you know.
So do you have one brand?
Yes, it's one brand. The brand is called To Be Me.
Okay.
And the whole thing about it is really, no matter who you are as a shopper, because our shoppers are very diverse, they will always find something for themselves again. So it's about being yourself. So To Be Me is the brand name really kind of says that as well. And the tagline for it is fashion for who I want to be. So we are not prescribing to them who they should be or who they should look like. And hence we don't even have a brand ambassador.
Okay. I was going to ask you that, why don't you have a brand ambassador to make this brand more popular?
Because the moment you have a brand ambassador, you're trying to be like that brand ambassador, right? When you, through the ads, you're promoting what the brand ambassador is wearing.
Or you just popularize the brand name, you know.
No, of course, you could do that, but our whole idea was let the consumers be who they want to be, and let's provide them with the right clothing for what they want to be.
So then what? I'm guessing you have in-house designers. I'm guessing you're not manufacturing it, you're outsourcing it, right?
Absolutely. The manufacturing is all outsourced to factories. In fact, the same factories that work for all the international brands in the country, we're working with all of them. So same fabric, same quality, same all of that. But we have an in-house design team of 10 members who are actually working on each and every design.
But then you're contract manufacturing, right?
Absolutely.
So then, and you're talking about a very high and a fast churn of 3 weeks. You have to change the stock.
30%.
30%. So then, do you have flash discounts for what's not sold?
So not really. We just manage our supply chain in a manner where, for those 30%, you order enough stock that you know you would sell out in 3 weeks. The idea is not to keep going on consistent discounts through and through. At this point, we have end of season kind of going on in the store, so there is a lot of discount today. But that's really how the overall fashion industry works. You have a mid-season sale.
So I'm guessing this is there as well, right?
No, we've not yet ventured with apparel into
haven't?
e-commerce. No, not at all. We have our e-commerce venture for the food side, which we can talk about. But on the apparel side, we've consciously not yet done it because we actually just launched in February this year.
Okay.
And so we're just about finishing
I didn't
our
know
first
that there
season.
were garments in a Spencer's till I came
Okay,
here. I'll be really honest with you.
Okay,
Yeah.
fine. Then maybe we should up our marketing a little bit more. Yeah, but the whole
But
idea.
will you be launching it on
online? Absolutely.
same website, or how's it going to work?
So we're going to be using the same website, and we're looking to list online through other marketplaces.
That's
as
what I was
well,
going to ask. Like, would it be like an Amazon?
Absolutely,
or-
because that kind of helps you build the brand as well.
So right now, what is the ratio? You've been conscientiously trying to reduce the food and FMCG up the general merchandise. You just spoke about it.
Absolutely. So food for us has traditionally been, say, at about a 74% sales of ours comes from food. 26% comes from non-food, which comprises of electronics, electricals, homeware, and apparel. And apparel has been much lower at about 4% so far. But with the launch of 2BMe, we've already been able to take it up to 6.5 to 7% consistently month over month.
What's your target?
And so our target for this financial year is to take it up to 8.5%.
Okay.
And the next
That's
year take it
quite an
up further.
move.
And over the next 2 years, we want to be at 15 to 17%.
But by then you'll have more brick and mortar stores as well, and plus
Absolutely.
the e-commerce, so that will be more.
Absolutely.
So, you know, I want to also talk to you about something which is very newsy at
Yeah.
the moment.
Yeah.
It's about job creation.
Sure.
So when I come here, of course, I see the jobs you've created, but we are in India's largest
Absolutely.
Spencer's. But now the fact that you contract manufacturing, for example, for garments, back end, you're creating a lot of jobs. Are you
Absolutely.
conscious of that? Do you?
Absolutely. I think that's one of the main things that retail also provides to the economy is a lot of job creation, and not just through employees who are working in the store, but
Back end,
back
yeah.
end. But exactly, there's a lot of stuff that goes on in the back end, on the manufacturer
private
side,
labels.
absolutely, private label side. Even when you're working with vendors and giving them sales, they have an entire back end infrastructure which employs a lot of people. So I think from that perspective, I think definitely it's one of the industries which has a huge potential for job creation, and it is always there in the back of our minds for everything that we do.
So tell me something now. When you came up with this strategy of garments,
Yeah.
or that everything had to be not branded garments, but your own brand,
Right.
and you were going to first do brick and mortar, then take it on e-commerce.
Uh-huh.
How difficult was it to convince your father? Or does he give you a free hand?
Yeah, yes, I think so. I think we run quite independently. I of course go to him pretty much every day with queries that I have, questions that I have, thoughts that I have, etc. And we debate them. We agree on some, disagree on some. And I think it's like any other father-son relationship or boss and
Well,
employee relationship.
like I'll tell you
So-
honestly, I could never have my dad as a boss. So how difficult is it to have Mr. Sanjiiv Goenka as a boss?
Not really. I don't think it's that difficult. I mean, I don't know. I think it's fairly okay, and I think we're very comfortable with each other, and we're at some level father-son, at some level friends, at some level possibly boss and employee. So it kind of just works. I don't think we think actively about it. It just flows and goes.
And, I started this interview by talking about your rich lineage, about how your ancestors even traded and had connection with the East India Company,
Right.
and etc. So are you very conscious of these business values and the family values, because this is a family that's very looked up to?
No, absolutely. I think since we've been small, we've not been explicitly taught values. Like it's not been a textbook learn how to do this and do that.
Yeah.
But we've kind of learned by seeing the grandparents, seeing our parents, seeing our older siblings in terms of how they conducted themselves, how they did things, even at home, even with guests, even at work. And so I think it's something that's kind of innately built into us from a very young age to be
Because it brings
the way
you
the
have to be
family is. So
responsible as well,
absolutely,
right?
Absolutely.
Okay, so with that, we'll take a short commercial break. You're watching India Inc. 2.2. We're coming to you from the country's largest Spencer's. See you on the other side of this break. Welcome back. You're watching India Inc. 2.0. I'm Nayantara Rai. Today, I'm coming to you from Kolkata. I'm at the country's largest Spencer's store, and I'm in conversation with the 27-year-old Shashwat Goenka. He's also the son of Sanjiiv Goenka. Shashwat, we've covered food, we've covered garments.
Absolutely.
I want to talk to you about technology. But before I get to that, because I think a lot of you retailers and all of you that want to remain as retail czars will have to stay relevant when it comes to technology and the competition you have. But before we get there, the journey so far,
Yeah.
it's not possible that there were no failures, right? Then it
Right.
would be just a fairy tale. What were the
Absolutely.
learnings, your personal or the ones that you've learned through your dad?
Okay. So, I mean, of course, I think failure is like it's a cliche, but it's a stepping stone to success. And I think without failure, you can really have no success, or you really can't go forward.
Yeah.
I think that's really a value we've also been grown up with.
Okay.
And so I think definitely there have been a lot of failures in our journey through Spencer's. So in fact, one of the things that we did, which we at that point thought was right because the whole industry was doing, was opening stores wherever we got properties. So there was a year where we opened over 300 stores. It's a store a day essentially.
Okay.
And then we spent the next...
And those were the headlines, by the way. Like I remember I was a young journalist with a newspaper, and everybody from Mr. Sanjiiv Goenka to Mukesh Ambani to Sunil Mittal, Kumar Mangalam Birla, these were all the headlines, one store a day.
Absolutely, absolutely. And I think the whole point then was we understood retail to be a game of scale. And if you had scale, you would make money.
Yeah.
Unfortunately, we learned that was not the case, and I think it was a great learning to do, because today we are very conscious in terms of where we're expanding. We have select chosen geographies where we want to expand, and we are focusing on winning those geographies first before we move and venture into newer geographies. So I think that has been one of the key learnings.
Okay.
In fact, when I look at failure as well, I think one of the things that I always remember is my grandfather, where he always said that, you'd rather try 10 things, fail at 7, as opposed to not trying anything and not failing at anything.
Well, that's a great thing.
So, it's I guess failure is really part and parcel of any business, not even business, it's part and parcel of life. I think pretty much in everything you do, you're good at some, you're not good at some, you learn from them and you move on.
So are you trying 10 different things like your grandfather suggested now?
I mean, in the retail space, yes, obviously, I think because there is no right model and there's that much more that you can give to the consumer pretty much every day. There's a new product, there's new technology that you can provide them with, etc. There's a lot of stuff that we're trying, a lot of new projects. In fact, apparel was one of the new things that we also tried recently 6 months ago, and it seems to be paying off well. So,
what was the investment that you made in garments?
So huge. I mean, I don't want to quote a number, but I mean, we've refurbished all our stores. They look
give me
almost
an approximate. You don't give me an exact one, ballpark range.
So it depends from store to store. So we have stores like the apparel section ranging from 3,000 square feet to 8,000 square feet. And depending on that, the investment kind of varies. But the investment went into crores in terms of each store, in terms of fit outs. But then there was also a lot of investment on the back end for tying up with vendors, for actually having a dedicated apparel team, a design team working out the logistics.
So it would be easily about 100 crores? Or more?
More.
Like 200 crores?
Won't give a number.
Okay, fair enough. I accept that. Now to talk about technology.
Yeah.
We are at a time where I'm sure even someone like you has to be aware of the fact that, Jeff Bezos, Amazon is trying to make huge inroads. You can't match those billions of dollars, I would imagine. So what's the game plan?
Absolutely. So in fact, I think e-commerce obviously is going to be an important part of the industry, retail industry going forward, and we can't ignore it. And in fact, that's the reason we actually ventured into an e-commerce space for ourselves, where we adopted an omni-channel strategy. So our stores serve as hubs to service our customers.
Yeah.
And so what we have in our store is what we have online, and that's what our consumer gets. And for us, the omni-channel thing works to our benefit is because we have an established brick and mortar presence and consumers understand our brand. They know the quality that we are able to provide, the prices we are able to provide them. They know that they can trust what they purchase online as well, because online takes away that whole thing of touch and feel, which is very innate to the Indian consumer. And so our omni-channel strategy is really bridging that gap between the lack of touch and feel, because they have the store to do the touch and feel, and they know they're getting their stuff from the same store. But being able to shop in the comfort of their home.
Correct.
So we in fact launched in 2 cities, Delhi and NCR and Calcutta, to begin with. Last year in October.
Been like?
So far the response has been great. We're having phenomenal growth rates. We're doing very well.
What is phenomenal?
I mean, the first few months we had 100% growth, but the base was low. And I mean, we've been able to keep that consistently growing so far as well.
So the festive season is upon us.
Absolutely.
What's the precursor like? What is the preliminary trend showing?
Okay, so at this point we are
because consumption hasn't been back full swing, right?
But we're already seeing early signs of recovery in the economy, where consumption is starting
to
pick up.
5.7% in the first quarter.
But consumption is picking up, absolutely.
Okay.
I mean, shoppers are spending more, and that's our metric of seeing how consumption is increasing. And normally we've noticed, even in the past, say when 2008-9 happened, etc., is that time also we were able to see the recovery much sooner than GDP numbers actually showed them.
Okay. And this is without flash discounts and
absolutely.
So that's not how you're luring them.
No. I mean, discounts are part and parcel of our industry, but that's not how. I mean, it's constant. My point is that doesn't change. If we have 500 discount items today, because, we have them pretty much every day.
So it's not that you don't have a billion-day sale or those flash sales that the famous e-commerce sites have. So that must be taking business away, right?
So yeah, we don't have those, but what brick and mortar retail actually has is a lot of consumption events built in. So people usually come to hypermarkets, shop in the first 10 days where they buy their monthly baskets.
Yeah.
That's not where you go online then. And so we already have those innately built into the consumer. So we play up a lot of our offers at that point in time. Then, I mean, in India, Republic Day, Independence
Yeah.
Day, these become big shopping occasions. You know, Durga Puja is coming up for the East. We have Diwali coming up for the North. So,
Yeah.
so there are a lot of these regional festivals that are there, which are actually huge consumption occasions. So we don't need
So
to
that's
really
a good thing to hear. The
create-
recovery is coming back. The consumption
Absolutely.
is coming back.
Absolutely.
Back to the peak levels.
It's starting to get there. It's not yet reached
Yeah.
the peak levels, but I'm sure in a matter of 6 to 8 months, it will be there.
We're just entering your technology aisle. I mean, we've been through half of it.
Absolutely.
Are you looking at private labels in this space? Or?
Yes, absolutely. In fact, we do have our own private label in this space as well.
Okay.
And again, it's about providing, so our whole thing is about makes fine living affordable, where we want to give you higher quality product at a very affordable and reasonable price.
Okay.
And so our private label embodies the same thing. Our private label is called Besser, which in German means the better life.
Okay.
And again, it's the same thing about providing consumers with a cheaper but as good, if not better, alternative to what's already available.
So, you know, I tried to ask you this earlier. You said you're very conscious of employment and creating jobs,
Yeah.
quality jobs.
Absolutely.
So, how many people are employed by the retail division right now, directly and indirectly?
So directly we have over 4,000 employees, and indirectly I'm sure it'll be over 40,000, because if you go backwards, integrate into pretty much everything that we do, it would be over 50,000 that would be employed there.
So, Shashwat, it's pretty clear that you have big plans. Any fundraising on the anvil? Are you well capitalized?
So I won't comment on that. Of course, I mean, as we go forward, we will be requiring funds, and we will figure them out as we go on. I don't want to comment on that.
Because in the past, we've seen most of it through via internal accruals, right?
Absolutely.
So, that could change? Is the
Obviously, I mean, by virtue of being listed, it is going to change, right? So,
Right.
absolutely.
Okay, and so you must come back on India Inc. 2.0 and ET now when we do see that fundraising take place. Are you going to tell me how much you may need?
At that point, yes.
Okay, so then we'll get you back on the channel. Thank you so much for inviting
Thank you so
us
much.
here.
Thanks,
Thank
Nayantara.
you.
Thank you.
With that, many thanks for watching this week's edition of India Inc. 2.0.